Hello, it's Doc Severson for the Theo Night Report for Thursday, February 23rd. We had some divergence today amongst the indices. We saw the S&P go up about a point while we had the Russell dropping down about 0.6 of a point or about 9 points today. So this might be a little bit of a canary in the coal mine if we start to see the Russell weaken up a bit, because this is showing for these stocks a little bit more sensitive to rises in interest rates, as well as a little bit more, well, a lot more illiquid. So in case of distribution, you got to start to distribute now and not wait until you move your own market if you're a fund manager. Now, nothing seems to be stopping the Dow right now. Apparently, we're into dividend hunting once again. And CNBC is probably starting to bang the pots and drums and start to look for 21,000. I'm sure that's happening, although I don't know because I don't watch. So from a macro perspective, if we just look at the market with larger time frames, we just basically see everything still moving up with the exception of the Russell. But sometimes if we take the time to look in between the time frames into smaller time frames, we can see that reversals start from the inside out. Now, what do I mean by that? Well, actually, if looking at in this case, the ES, which is the S&P futures, okay, we can see that up until today, what we have is the very typical type of price action. And we can see this last Friday where we start out in a very negative fashion. We actually gap down and start the day in a negative fashion, and then what occurs is through the rest of the day, slowly, patiently, every single bear gets squeezed out of the market, and the market ends up slightly higher than it did the day before. This is really what we've been seeing over the last 8 years, is this sort of Groundhog Day price action where we start out a little bit soft in the morning, the bears get their hopes up, start to short the market, and then very persistently and very methodically, they are squeezed out of the market. We can also see this occurring on Wednesday. So yesterday, we started out with a little bit of a gap down, a little bit soft overnight. Slowly, persistently, those shorts are squeezed out of the market. Now, today was something very, very different, and I've been talking to folks about this lately, is that what we want to look for, which might show a change in character of this market, so where we get away from this sort of Groundhog Day price action, is if we gap higher overnight. Start the day very positive, especially right at the cash open as we did today, and then watch for that to be sold into immediately. So somebody's waiting for the cash market to open up today, and they sold right into that. So it's especially important that we start the day on the highs, because this is where retail money chases after a market like this, and this is where we create that liquidity that's so necessary for institutions to be able to sell into those sorts of moves. Now, by itself, just this move by itself in the first about 120 minutes didn't really do all that much damage, but it does set the tone that we might be moving into the next range. So you can see the same kind of thing happening on the NQ, which is the Nasdaq futures. Pretty serious move this morning in setting up a different range. Now, if I go out and look at the Nasdaq daily chart, what this might mean is that we are starting to set up the next range for this. Now, this by itself is not really that big of a deal here. All these ranges is where we go from a strong move that hits exhaustion like these have. Okay. So here's another move that hit exhaustion right up there, set up the next range. And you could say in a very modest way that yes, we are definitely near exhaustion, and this is way overdue for this to set up. So by itself, this can actually create a lot of opportunity, whether or not we're just day trading, looking for a larger range intraday, or whether we're swing trading against something like this, creating the next range. So you can think of some ideas being in this is that this might be a good time to sell something like a low probability iron condor, which is right at the money and offers very rapid time decay. So if you're having trouble making sense of this market, sometimes it helps to actually zoom in and look underneath the hood and see how the actual moves of the day are starting to work themselves in. Watching that change in character, watching early strength get sold into, like what we saw today, could be a tip that we're starting to see the next range built up. And anytime we see any kind of structure like this, we can take advantage of structure like that. That is it for today's report. Thanks for listening, folks. We'll see you this weekend.